right, welcome back, everybody. This is the final live Thursday of the year, so I figured I would do the same thing that I did last year, which is to dress up in a silly costume just because. So today, I figured I would dress up as Ahsoka Tano from Star Wars. Why not? This was actually my Halloween costume, so I might as well do this again. All right, so let's hope I can trade with this bloody thing in my head because it's quite unwieldy. So respect to the actors who have to wear this crap on their head. All right, anyways, let's have a look at the charts. We're going to start with my favorite. Yeah, it looks like a pharaoh, doesn't it? Yeah, it's not pharaoh, it's Star Wars. So yeah, let me change the scene. Here we go. Okay. You know, Pharaoh, Jedi, is that not the same thing? I suppose it might be very similar. And I know she's got like stencils and everything. I couldn't find a white pen, and yeah, so I decided to just go with just normal face, but silly headgear. I actually have like a full-on costume. I don't know whether you can see. Hold on, let me change that. So I don't know whether you can see. Like I have the whole thing on. And it is winter, so I'm probably going to freeze my bits off. Right. What is going on? So let's see who we've got in the house. We've got Trader Andy. Hello. Bass. Brent. Haluk. Oh, Haluk has joined us. Very, very exciting. Okay. And today, because it is the final live stream of the year, I did open up this stream for all members of the channel so that everybody can ask questions and we can have a bit of fun today. I already traded DAX this morning. I actually traded full DAX because it is time to start scaling up. So also DAX has come back with a pretty decent range, so I'm going to talk about that first actually before we move on to crude oil and other things. So let's see what I did here using the Blahtech backtest mode. There was an open outside of value, outside of range, and the initial balance actually spanned 77 ticks. So that was the first sign that DAX might be back on the cards. One of my rules is that unless the product actually has more than 120 ticks range, I don't really trade it. I exclude it from my tradable instruments. Why? Because anything sub 120 ticks for a session, it becomes very painful to trade. And I bloody hate slow-moving instruments. So to prevent my soul from dying and losing the will to live trading such slow instruments, I usually just exclude whatever is not moving until the ranges come back. And my dogs are going batshit crazy, as usual. Okay. They should settle. The rest of them are coming back from the walk, so this always happens in my house. This is the problem with having multiple dogs. But on the other side, nobody would ever think of breaking in here because my dogs are batshit crazy. So there's that. They're small, but two of them are not that small, but the others are pretty hilarious. So yeah. Okay, so DAX trade. Open up above value, and we always have a possibility of the market going back to value whenever that happens. Now, not every single time, because there are times when that's more of a reprice. Interesting, some of them are singing. I'm going to mute myself while this is going on because it's crazy. Hopefully that little singing session is over now. So Brancy is saying that my stream is members only. I don't know why, because I actually set it in YouTube to be subscribers only, and then members can send messages. But let me double check that. Thanks, Brian. It's very difficult to like maneuver with this thing in my head. So if I seem like a bit robotic, I do apologize. Yeah, you're right. Why didn't that change? Oh no, it is all channels. It says members only, but all channel members. Should we maybe make this public? Should we just go crazy and make it public? Let's make it public. All right, that should change the stream to public only. Sorry, to public. Let me know if that changes. So let's see. But keep it on subscribers. Okay, Jeremy, hello. What's up? What's up? Well, what is up is that I put on a rather silly outfit today. I figured I would make this a tradition to dress up as a silly character for the last live session of the year. As you guys know, I usually take the second part of December off when it comes to trading. Even if I do trade, my frequency of trades are much less because I want to preserve the capital. We're going into the end of the year. There's tax to pay. There's a whole bunch of things that are a little bit annoying, but a necessary part of running a business as a trader. And then I give myself a little bit of time to recharge batteries. All right, so recap of my DAX trade from this morning. Right off the bat, I had an initial balance of 77 ticks or so, and I was like, okay, that's a little bit better. I don't like trading anything that has less than 120 ticks per session range, per average session range. So until the market climbs back up with the ranges, I try not to trade it. And DAX was really quiet. Like if we go back further, even just last week, initial balance 41 ticks. Really crap. New York, again, that's not an active session. Going back to London Tuesday. 27 ticks for initial balance. So literally whenever I see the initial balance in DAX, anything sub about 65 ticks, it means something's up, like the liquidity is just not there. And then I just don't trade the London session until that comes back. So this morning I got up and I was like, okay, that's looking a little bit more healthy. So I also waited to see what's going to happen with this sustained auction. Obviously, whenever you have a gap up, there is a good chance that the market goes back to value first before it does anything else. So I waited and waited, got a little pullback, and then I didn't use any particular pattern to go in. I was looking at the orders on the ladder, and I noticed some sellers were waiting to get in somewhere around, I think it's about 17115. And I figured, you know what? It's already a sustained auction. It was kind of struggling to close this single print trail, even though I gave it a good attempt. So I'm like, well, I don't want to go against the gap that is clearly already in progress, and I didn't really have any good levels here. So I decided to go with the sustained auction down and to look for that return to value. Now, I didn't stay in all the way. I managed to take about 83 ticks out of it. So that is about 2.3 R or something like that. Yeah, so that's about 2.3 R. Now for me, DAX does reach 2.3 R pretty frequently. I usually use about 35 ticks whenever I'm trading DAX. I don't like to use less because, again, it means that the liquidity is not there. And it seems to work quite well for me. And then I exited the trade. I booked my profits, and the market just carried on going down. And right now, there's still a lot of movement, but I'm not really interested in trading DAX because this is not its active session. I don't trade DAX for the New York Stock Exchange hours, primarily because I like to focus on crude oil. That is my main instrument. But for London, DAX is my main instrument. It used to be also gold, but gold has been a little bit sketchy during London. Trader Andy has a question. Do I trade via Top Step or Apex for DAX? I actually trade my personal account. I do have other accounts as well, and currently I am transitioning to Top Step because they are bringing Eurex, and you know, there are discount firms out there, but there can be a problem with the regulation with the firms that are SIM only. So I'm just kind of covering my bases. I'm not after the whole blow up of my Forex funds, I'm not that happy being with any firm that can come under potential investigation. So I obviously don't want to lose my accounts. However, I have accounts everywhere, guys. So keep in mind that whenever a new firm pops up, people are like, hey, do they pay out? So the only way for me to find out whether they pay out is to get funded, try to get a payout to see how they behave. And so far, for the futures firms, I can say that all of them do pay out. So that is the important thing. Now, where I trade DAX is less important, like I said, because I do have a private account, I have my own private brokerage account, and Top Step is also coming up with Eurex. So if you want something that is not going to come under fire or a CFTC, or you know, you're basically looking at a safer way to trade, just wait for Eurex to come. And it's going to be quick. I know that Top Step has already put things in motion. Very happy that they're doing that. They're one of the only reputable firm that is bringing Eurex to everybody, Eurex futures. So very, very exciting. And obviously there are certain Forex and CFD options out there, but for the sake of regulation, I'm not happy to go with them, okay? But when it comes to accounts, I literally have accounts with like 90% of the firms that are out there. Do I trade all of them? No, because nobody can trade that many accounts. That would be a bit silly, and you don't need to do that, okay? So just focus on like one firm, whichever firm you want to go with. That's absolutely fine. I'm not here to tell you who to go with, but I'm just giving you the lowdown of what are the positives and what are the negatives with all of these companies. Okay, so I will have a look at NQ. So quick rundown, like I said, it was a sustained auction, joining the sustained auction after a pop downwards and then a pullback. It is a pretty straightforward trade. I didn't even actively watch it. It just kind of went down, consolidated a little bit just ahead of the New York Open, and then it smacked it down, and that was it. Okay, let's have a look at crude oil, because that is my main market. I want to try and get a trade in there. Crude oil is also opening with a gap up. It has tried to go higher, but for now, it has failed the auction. We're building quite a lot of structure now. The initial balance is not massive at all. It's actually pretty small for crude oil at 55 ticks. Now, we had an FOMC rate decision yesterday. Crude oil doesn't necessarily do the whole super volatility for FOMC. So naturally, it was pretty subdued compared to NQ, gold, and some of the other instruments that are more sensitive to that particular release. So because of that, I traded, well, I was on Top Step TV actually. So that was the only trading that I did for the entire day. So I did a couple of scalps, tried another gold trade, cut that one at 11 ticks minus, and then the other 3 trades in crude oil that I did were all profitable. So that was a pretty quick day for me. And then I was watching Top Step, but I didn't actually trade anything after that. All right, so several scenarios here. The first scenario, we can have market going higher. So to not fight, sorry, my dogs are just going batshit. So to not fight the move that started overnight, and I'll explain why, there is a small chance that this carries on higher. Okay, anytime you have a small-ish initial balance, there is a very good probability that what you're looking at is maybe not necessarily a mean reversion opportunity, but rather a repricing opportunity. Now, we didn't really have anything new coming out of the FOMC. They did what they said they were going to do. So it's still a very good possibility that we're going to just keep slowly crawling upside. But keep in mind that the auction is not doing very well at the moment. If that changes, we're going to see a decidedly confident move higher. So if that happens, I won't be trying to short or anything like that. But for now, my focus is actually on my second hypo. Now, the second hypo is the failed auction short, which is what I want to try and get into on this stream. And let's talk about the profit margin of the failed auction short, because we do not have a massive initial balance. So that means, even if I shorted right now, I have a maximum of 60 ticks profit margin for the highest probability trade, and that's that the market rotates back through the initial balance. So should we try that? Let's try that. Let's try and short. And there are some sellers around here that I can't see on the ladder as well. Okay, so I got in at 71.94. Let's put that on this chart here. 94. There we go. And this trade location is right at the round number. It's like within a few ticks from the round number. So that's always a good trade location. Obviously, if this doesn't rotate back through the value, then we won't be looking at the failed auction short. Third possibility is that we end up in a rather boring neutral day that doesn't have a lot of range in it. Okay, so we could look at the responsive activity. Well, although this would be more just a rotational day sort of case, not necessarily responsive, because we haven't even made an attempt to go back to the value area, which is usually the hallmark of responsive activity. Why? Because market makers trade during the first hour of trading. So whenever you see a mean reversion that happens during the initial balance, that's the market makers. Okay, it's not going to be the other time frame participants who have some rather different goals, so to speak. And of course, there is still a chance that the market goes down into a mean reversion. I will talk about the average session ranges in a minute. Let's move this here. So what would this mean? It would mean first a failed auction and then a continuation of that failed auction all the way down to somewhere near this whole area. So why this whole area? Well, I have the average session low. This is why I said session range low. Average session low is located at 70.11, 70.10. And we do have the session high from yesterday, which is not an average session high, it's just a regular session high, at 69.84, and then the value high as the final stopping point, if we do manage to even get there, at 69.57. Okay, so that would be like crazy target, and I doubt that I will be holding the trade up to there. One thing to look out for these sort of plays, when you have a tiny little initial balance, an attempt at taking the price higher that fails, is that at some point you might actually get single prints below the initial balance. And at that point, you still have that mean reversion opportunity, and we shouldn't really go against it. Okay? It becomes very dangerous to go against that. GGZ. Which platform is that? This is AMP Futures MetaTrader 5. So the the contract that you see here is from CQG. They use CQG as their data feed. I use MetaTrader 5 with my own indicators, the Blahtech ecosystem, for all of my charting purposes, right? And then depending on what I'm doing, I will be executing on various different platforms. You know, it's all dependent on where I'm trading, who I'm trading for, and Jesus Christ, they're just going nuts. For those of you who are new here, I have 8 dogs. 4 of them are barking downstairs. And they're very excited, even though they already had their walk. But the other 4 are out for the walk, so these guys just pissed off that they can't be in the office. Why? Because they do this sort of shit. So obviously I can't have them here. Makes it a little bit more palatable to have the dogs barking downstairs. They will settle. Once the other guys are back, they will settle. But yeah, they're still crazy. They're still young. 6 of them are 2 years old. And then we have a Cavalier that's 11. And then we have a Pomeranian who's 4.5. So, yeah. All batshit crazy. So, yeah. Oh, Rita's joined us. Hello, Rita. How are you? All right, let's have a look at NQ now that I have my my hypotheses of for my crude oil, my main market. Okay, the others are back. All right, so let's clean the chart up. And let's just kick off a multi-time frame indicator. Right, so we have a sustained auction up. The market attempted to go through the what is that? It's through the overnight high. Didn't quite manage to do that. So I think ES actually did look above. See what I have to do with. The husband's going to take care of that. That's good. All right. So NQ tried to go above, but all that happened is that it hit a first available supply from overnight trading. And then it promptly had some excess here and reversed. And now we have a sustained auction down. So the next stopping point here, the next line in the sand, so to speak, is the value high, which is located at 167.1975. If the market decides to go through that, we will have cause for a value acceptance. And then you can expect some move through the value area. Having said that, the value area is pretty sizable. It's 128 handles. So that's 128 full points. And per point, we have 4 ticks. So that's, that's a lot of range. But if we manage to go below this area, we're going to have a bigger volatility day yet again. Nascrack doing it once again. Partying hard. Okay, so why do I say that if we go further down into value, we're going to be looking at an unusual day, higher volatility day, because these are your average ranges. So I have the average daily range low at 166.9975, let's say. And then I have the average session low, which is located a little bit lower than that, 166.86. So naturally, if the market ignores those and carries on through, that means a higher volatility day, in which case you cannot use my average ranges as reversal points. So the whole deal with scanning for continuation is so that you can determine whether you have a normal day, in which case you do expect some sort of a reaction and an ultimate reversal from the average ranges, or whether you have a high volatility day where the market ignores the averages, so therefore an abnormal day. So once you start putting those pieces together, it becomes a lot easier to make a decision of what you should do and whether you should be getting involved in something like that. Now, when it comes to the strength of the auction, looking at the TPOs here on the right, which, by the way, these TPOs here, the letters on the side, A, B, C, D, that's the same information that I have as a graphic overlay on the chart directly. And this is something that I always wanted to have, but in some of the other platforms that I was using before we had the Blahtech indicators and the Blahtech ecosystem, you always had like a separate window, and it used to piss me off to no end, to just constantly like drag things over. So I wanted everything on the same chart, and this is also the reason why we have the overall volume here on the right side, which is this, and you also have the actual volume profile here too. I'm just going to change some colors around so that you can see the POC. I know that a lot of people like to see the POC. Just give me a second. For those of you who have just joined us, if I'm doing this like a robot, it's because I have this silly little outfit. Why do I have the outfit? It's because it's the last live stream of the year. And last year I dressed up as a unicorn. People seem to like it. I liked it. Thought it kind of broke the mundanity of you know, watching live streams and trader trading. So I figured I would do it again. So here we are. So therefore I have to be very careful with this because it's a bit unwieldy. All right, so I'm going to change the POC to like some crazy color, like magenta or something, so we can all see it. And I'm going to do the same. There are two areas. And all of our Blahtech indicators, they are highly customizable, however you want to have them display things. Okay, magenta, there it is. So, one thing that you might want to consider is that value high in equities with a gap up, so opening above value, above range. If the market gets to that area, it's usually a very good reversal area, but only if you can find a reason for it. If you don't have any good levels around the value high, or the value high was fairly close to the initial balance, then that theory kind of has slightly lower odds. So as always, everything is contextual. And today we do have those average ranges on our side. And since the auction is not the strongest, there is a good chance the value high and or average daily or session range low comprised in this orange rectangle, that they might be pretty good areas for reversal intraday. And this is an equity index. We know NASDAQ likes to go long, long, and more long. So that's not a bad strategy. I'm not a NASDAQ trader. I just want to put that out there. I am okay at reading its levels, but I'm a little bit too old at this point to be dealing with an instrument that just whips 50 handles in like 3.5 seconds. So at this point in my career, after 16 years, I am a little bit set in my ways, so I will stick to crude oil. But again, you've seen over and over that my levels are still working in NASDAQ because I do work from that systematic framework, which allows me to analyze things pretty well. And I have traded ES since like 2013, so I do know how equities behave. It's a personal preference. I don't like NASDAQ. It's just how it is. So I said that the auction is not the strongest. So why am I saying that? It's because if you look at the TPOs, I'm just going to compress them a little bit. So that you can see what I'm saying. I know, Brian. Yeah, NASDAQ is your main jam, isn't it? Right, so let's go changing. Now, don't do this if you're not sure exactly what these numbers do, but I am going to change the TPO size in an effort to compress this profile a little bit more. Here we go. Now, you should see here the letters a little bit bigger. So there are no single prints. Okay, so this is not a strong auction, and we have already this early on built 4 TPOs per row. So you can see here A, B, C, D. That's already 4 TPOs per row. That's rarely an indication of a super strong auction. We still have the possibility of a mean reversion back to value, but it's not doing it in a crazy, let's just all jump off a cliff because everybody else is doing it way. So because of that, like I said, I wouldn't exclude the possibility of market just going back to these previous areas of selling. And what I'm talking about specifically is that we have these like staircase formations. I like to call them staircase formations. Some people like to refer to them as drop-based drops. But at the end of the day, it is all one and the same thing. It means that sellers are stepping in, then you have a pullback to the previous area where the sellers took control again, and then you have another sell. So if I see a failed auction, I wouldn't actually consider it valid, not at this level, primarily because we have this drop-based drop formation that is acting as resistance. So it's supply means resistance. Again, very similar concepts. It's just that supply and demand rules have some more conditions than your regular support resistance, because usually support resistance doesn't really measure much more than, oh, was it touched? Was it broken? Did we reverse? Whereas supply and demand actually has six different conditions that you need to be looking at before you can decide if it's a good level or not. Now, for intraday trading, you need something else. It's not quite enough to just stare at the supply and demand. There is the open sentiment. Then you have Hogue, who looks at open interest. You have the strength of the auction. You have the location of value. You have like a whole bunch of other things. And intraday trading is the most sensitive type of trading to any inconsistencies that you personally have as a trader. So again, we need things to make sure that we are making the right decision, that if we are getting involved in the middle of the range, which effectively would mean selling right here at 167.95, that there is a reason for that. And some of those reasons, number one, we're still not in value high. So we're still away from the distribution curve from yesterday's trading. So this whole move is literally just like mean reversion attempt to go back to value. So we didn't hit that just yet. So we have some space. Now, if I was to say, oh, well, but the auction failed, well, yeah, it failed, but we have level upon a level here, stacked level. That's going to be very difficult to battle through. Even if it works, it's very likely that it's going to take time until the market goes through all of those sellers that, that made their mark already. So all of that comes into consideration when I'm creating my hypos. Did the market already fulfill the target that the setup calls for statistically? And if not, can I justify getting involved either here or here, which incidentally is also an overnight VWAP area, 168.19 half, let's say. So all of that plays into my decision-making process of whether the failed auction is valid or not. And I really don't care if it keeps going up. It's not doing it from my levels. So there's a very big distinction. Some people experience FOMO because they're like, oh my God, I have to get in. You don't have to get in. If the market is not doing what you want it to do, you shouldn't be in a trade. As simple as that. We have someone new here, Andre. Hello, Andre. How are you doing? You will notice that this is a pretty small, intimate community, so don't be surprised if we call you out or if I call you out. Say hi personally. Hello, welcome. Yeah, so that's Nasdaq for you. Should we look at gold? That's my other instrument. All right, I'm going to bail out of this short. I've just seen that it's not doing what I wanted to do. All right, we wait now. Now we wait. Where is gold gone? Let me undock that. How far is this crude oil from the initial balance? It's far enough. I'm going long. All right, so it looks like my first hypo might be the one. So we'll see. We have now definitely ignored the average session high in crude oil, and it's trying to push higher. So it's worth an attempt. But again, I'm not going to keep a close eye on it because I want to analyze some other things. So therefore, I'm going to park that, and I'm going to revisit that later. All right, gold, gold, gold. Clean up the chart a bit. I mean, gold tried to go higher. Now it's back down inside the initial balance range. Again, not the strongest auction. And since gold opens up a little bit earlier, we already have 5 TPOs per row already. So yeah, if anything, this could spell a boring day. It could spell a ranging day, which, by the way, doesn't mean 0 opportunities unless you have like a tiny little range. It just means that the market is not going to be directional, and then you need to switch strategies. You need to have, like, somebody asked me, oh, you know, what is your favorite setup? Well, I do have my favorite setups, but it really depends on the type of a day we're seeing. As an intraday trader, you can't really limit yourself to just one type of trade. You can't just be a directional trader. You can't just be a reversal trader. You can't just be a range day trader. So you have to have tools to deal with all of those. And actually, ranging days are pretty bloody important because they happen really frequently. They actually happen more than 50% of the time in all instruments. On gold, I believe they happen about, I think it was 52%, maybe even 56%. Yeah, but definitely over 50% of the time. So when you're looking at 3-year sample size, and in 3 years, you've had 56% of the days, they were all range bound, but you only know how to do reversal trades or directional trades, obviously you're going to be struggling on all the other days. So your job as a trader would be to identify the day types that you suck at and then to work on improving those. Personally, I was terrible with ranging days because I was a reversal trader mainly. So I would like to see like a big extended move that hits a level and then reverses. That is where I excel. However, over the years, I've managed to find ways to make range days into some of my best days. Because in effect, if you know what to look for, they're actually pretty logical. But you have to stay away from the middle of the range. That's the only thing to remember for range-bound days. So thinking about that, where would be a good area to get involved? Well, certainly not where the price is right now. Right now, we can go down, we can go up, like it's all up in the air. Furthermore, we still have a one-sided auction. So at some point, it might just carry on higher. That is an unknown, and that's okay. But if I was to say, I'm guessing this is going to be a range-bound day, what would be a good trade location to do so? I would say somewhere around here for shorts. And then somewhere near session high and settlement, entire zone. So anywhere from about 2038, but not before 2044. So that would be ranging day strategies for me. So those two areas. Why? Because here we have settlement, and then up here we have some sellers already. Anything in the middle would be a guess. It would increase your risk, because if you were getting involved here, it's all very well putting your stop loss a tiny bit over, and this is it's a pretty big day. It's 200 ticks in gold already. And that means you have to get really good at trading locations as well. Otherwise, you're going to need massive stop losses. But if you wait for the market to reach one of these areas, and then you go, well, actually, if I get a short at 2060, that will allow me to run a 35 tick trade and then to aim for the middle of the range, where you actually have like 86 to 90 ticks space before you hit the middle of the range. When I say middle of the range, I mean session low to session high and then wherever the middle is. So that would be my take on gold. That would be the primary strategy that I will be looking at. But like I said, one extenuating circumstance in gold is that we still have a one-sided profile, effectively. And then if we do get here, this is too slow for a failed auction as well. So another point. But if we do get all the way to session low, I wouldn't expect the market to stop there. I would expect it to extend and then maybe start pinging back. So again, range bound day. So as long as you have a strategy and as long as you're not chasing levels like a madman, you should be okay. You know, the people get themselves in trouble because they start chasing. That's like the worst thing you can do. Okay. Brian C says, I decided to officially divorce CL. Fair enough. Yeah. I would be able to catch amazing trades, but the amount of times I would get hit before it eventually goes in my direction was just plain annoying. I know my timing and entry was off. Yeah, I mean, there's a reason why crude oil is considered one of the toughest instruments to trade. Because when you do get it right, it rewards you massively, but the amount of times and speed by which it does that, and then the fact that that crude oil loves to do these ping back trades, so you would get one move and then it would just reverse. And if you don't know the exact times of day when these events happen, it punishes you. It is a monster to trade. This is also the reason why a lot of ES and NQ traders, they stick with ES and NQ, because once you get a directional move in those instruments, they tend to be easier and longer than crude oil trades. And also crude oil has these days where it does neutral days that are massive. So you have extensions on both sides, but they're just hugely spiky, very choppy. And I love crude oil because of that, but I totally recognize that it's not for everyone. So if you have one particular product that you excel in, just stick with it. Learn how it breathes, learn how it behaves through every single possible event. And that becomes your thing. You know, you don't have to trade crude oil just because I trade crude oil. I know I've sort of infected many people with crude oil because of Top Step. But yeah, it might not be for you. It's not for everyone, definitely. And, you know, remember that I've been trading crude oil since 2013. So there's a lot of years of journaling, watching it, putting down times of day and, you know, patterns and profile. How did it look? Why did it do that? So I know it to its core. So, it's just the sheer time that goes by sitting with one instrument. That is what gets rewarded a lot of the times. Yeah, so there you go. Brian C says, neutral days are my favorite type of days to trade. Yeah. See, for me, for years, probably for about, well, really up until about 4 or 5 years, I hated range-bound days. I would be like, this is fucking impossible. Like, I want out. I don't want to trade. And yet, you know, some people love it. They're like, yeah, they're great. I just wasn't naturally good at them. All right, should we have a look at ES while I'm kind of jumping through different things here? Where is my ES? There it is. Yeah, I mean, I trade gold when the opportunities look right. I wouldn't say it's my main instrument at the moment. I had a time last year when gold performance actually took over my crude oil performance. I was a little bit surprised at that because I was like, really? What's going on there? I mean, I was doing pretty well in both. It's just gold's performance metrics looked a lot better. Like I had a higher accuracy. The profit factor was higher. Like everything was just like smashing my crude oil performance. And I was like, oh, okay, that's interesting. All right, ES. Just going to have a look at it on the daily. I mean, daily just looks bullish, and more bullish. One time framing higher on daily. little demand that was created on the way up, and now we're getting a bounce from there. That's why it's important to know my conterminous lines, because they be reactive. See that? Pop into that and then smack. Now this is what was going on in 2014, but on a much tinier scale. So we used to get 12 to 20 ticks range per day for the entire day. That was ES when I started trading it. And then people ask me, why don't you like ES? Yeah, that's because it spends years doing nothing. That's why. I am seeing a failed auction here, but unlike NASDAQ, this one actually has a more compressed range. So I would actually call a range-bound day here. And ES is one of the products that loves pinging up and down, because with crude oil and gold, whenever you have a range-bound day, there's always like one side of it that pulls stronger. So even though it's a range-bound day, you might only get shorts in play, or you might only get longs in play and things like that. Whereas ES, when it's ranging, it's like ping, 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 like literally just ping pong game. It's like nuts. If we do get that, I do expect that ES might turn into a neutral day at some point. So I wouldn't expect it to stop at its session high, which is 47.91.75. I would expect that to smack through the session high, then reverse, and then we have the ping pong situation. And there's plenty of time left in the day. It is only Thursday, so we have a whole Friday to play with. And this is now after FOMC rate decision. So all the major moves were done yesterday. Some Thursdays you can have a continuation of that, but usually it doesn't look like this. This is way too slow for that scenario. Never say never, obviously, because it is an equity index and it can go into a crazy upside at any point of the day. But for now, we've built quite a bit of structure here. Like if we look at the entire move, so it's not the biggest range either. Like we're talking about 91 ticks here. I mean, the ranges have come down a lot. That's another thing. We had this post-COVID thing that meant that all of the ranges were much, much bigger than they used to be. But what I'm seeing here is that we've come down to 150 ticks average range. Now, remember what I said on DAX at the beginning of the stream, how I don't like when every time I see something that goes below 120 ticks. Well, ES is kind of verging on that. If it falls another 30 ticks, I won't be trading it until it comes back up for the average session range at the very least. So yeah, dwindling of the ranges ahead of Christmas. And my average ranges, so Blahtech DR indicators, they have a weighted average. So when you have a big day like this, it will be included in the calculation. Otherwise, if you just use a plain mean average, what happens is that you might get an increase, but it's not going to show up for another 5 or 10 days until the whole thing catches up. Whereas with a weighted average, any change in liquidity does get included. So that's worth noting. Jeremy says tomorrow's OPEX. Brian C also says behavior for gold changed drastically during summer. Everything changes drastically during the summer. Typically, liquidity falls immensely in July and August. That's nothing new. Sometimes you can have gold still going crazy, even though it's the summertime. But that has not really been the case in the last sort of 2-3 years. we had the COVID year, lockdown year, when everything was crazy, and that summer we had no change in liquidity because everybody was stuck at home, everybody was a bloody day trader, and obviously all of that was contributing to extra liquidity. But then as soon as that was over, we had the next year that was pretty normal, and then 2022 again pretty normal, and then this year back to complete normality, slow down for the summertime. That is definitely a part of trading, so that's why journaling can help. And backtesting. You know, that's one backtest that you can do pretty confidently without any sort of bias or over-optimization. Just looking at the ranges. Like, how was the range the previous year? How was the range 10 years ago? It all, you know, it can all go towards your data gathering efforts. Deviate obviously wasn't here from the beginning. Every year when there's like the last live stream of the year, I like to put on a silly outfit. So this is Ahsoka Tano from Star Wars, and last year I was a unicorn, disco unicorn. But I've been watching a lot of Ahsoka cartoon and the show, so I figured why not? I actually bought this for Halloween, and I figured I would wear it this year. Recycle. Yeah, so last live stream of the year, I like to put on a silly outfit and then talk very seriously about the markets. It's a nice contrast. So yeah, just a bit of fun. Nothing special. I'm not promoting Star Wars or anything. I'm just a massive fan. Yeah, so silly outfits. Last live stream of the year. Usually I take at least 2 weeks off, sometimes 3 weeks off around this time of the year. So from the 15th all the way through to the first week of January. That's like my annual leave. And then I come back. So second week of January, we shall be back. I don't know what Top Step are planning. I'm pretty sure they're going to keep going. They're just knocking on the Top Step 50k subs on YouTube. But we'll see. Yeah, see that? Yeah, full props for recognizing the outfit. Not. I can imagine Ahsoka Tano might not be the most famous character. And I've got everything. You see, I've got the sleeves, got the top, everything. Even though it's bloody winter here in London, but it's a heated house, so we'll be alright. I love Star Wars. I'm a huge sci-fi geek, if you didn't know that. Alright, so now that I'm done with my analysis, we can relax a little bit. Let's have a look at that gold. No, what was I trading? Crude oil. That's right. I'm going to try and put all these charts on the same screen, which might be a bit of a stretch. Just so we can keep an eye on all of them. I'm going to go up to a 30-minute chart, which is how I like to analyze the markets. Right, crude oil just crawling, but it's above the initial balance, so this trade is still on. Obviously, I jumped in because I wanted to talk about other things, and I wanted to have a trade in. So I expected a little bit of heat there. That's not a problem. Usually 35 ticks is a pretty generous stop on crude oil, and if I'm right on direction, it usually survives most things. Oh, that's another thing. Brian, what size stop loss do you normally use on crude oil? Because that might be the problem. Precisely because of the ping chop that crude oil likes to do. Let's see if I can get NASDAQ on here as well. Maybe do like a 4 chart thing. I used to have a script that will line up undocked charts automatically. But again, on TopStep TV, that wouldn't work very well because they have us sort of on this side, and then a lot of the time they have a whole bunch of stuff at the top. So you actually have to keep, well, I actually have to keep my charts pretty low on the screen so that you can see everything. And NASDAQ, here it is. NASDAQ. No, I don't like that because I'm blind. Try to like compress the chart. I'm like, oh yeah, let's just keep it like this. I can't bloody see that, so that's not gonna work. Jeremy says tomorrow OPEX. Yeah, they're always having meetings. Nate, hi Nate. He says, I became a fan of your, oh thank you, that's very kind. Watching you on TopStep, you're a very smart trader and I love your spot on levels. You earned yourself a fan and so, oh thank you. I really appreciate that. Welcome, welcome. Very good to have you here, Nate. Oh, click the little square on top right corner of the chart. Top right corner. What, you mean this thing? Yeah, that doesn't, that's just minimize, maximize, unless I'm clicking on the wrong square. I do not know. Hover over it, I see. I hover over it, nothing bloody happens. Just says maximize, minimize. Yeah, I'll just stick to this. There is a script though. There is a script, but when I rebuilt a new computer, it unfortunately just deleted a whole bunch of scripts that I had, and now I can't find them. I put them deep in the. Do you do that? Like, you know, when you have like so many things in one folder for like years, and then you're like, where would I have put that? And you know it's somewhere on the disk. But just to dig through all of that, you don't even know the name of the file. Do you ever do that? Or is it just me? Maybe it's just me. Some people think that I'm OCD, but I'm actually not. Like, I'm probably the least OCD person that you know. Up until very few years ago, my house just used to be like a tip. There was like crap everywhere. It's horrible. There is this funny kind of greeting card, postcard, whatever it is, and there's a Van Gogh picture called The Room. Now, he's like painting it all nice and tidy, but in the background, there's shit everywhere. So I thought that was kind of an apt description of somebody who has an artistic mind. And in our heads, you don't really notice crap around you, but as I got older, especially since I got into my 40s, I don't like mess. I like mess up to a certain point. Like, I like a house to look lived in, but I am having a problem with too much mess. So when things get really cluttered, I'm like, okay, it's time to definitely time to tidy up. It is bothering me because it takes away time from other things that I could be doing. Maybe it's a maturity thing. I don't know. Windows 11. I'm on Windows 10 still. So, yeah. I keep meaning to move to Windows 11, but my husband has it on his computer, and I'm like, ew, what have they done? So I need to get out of the Granny D state and get into the hip D, going with the times. But hey ho, one thing, yeah, one step at a time. Yeah, Linux, yeah. Linux and trading platforms might be a bit difficult because I'm not sure how many of them actually support Linux. Linux is the perfect operating system. It's one of my favorites. Very stable, like one of the stable operating systems. But unfortunately with trading, it's always Windows-based. Like even in like companies like Barclays Capital and stuff, they will run Windows. Older version, usually. But yeah. Abdias says, I got smacked 3 times today, twice on good gold and once on CL. Okay, well, time to stop then. You know, you got smacked 3 times, 3 trades per day. you're lost, it's time to call it a day. It means that today, for whatever reason, you're not reading the market right. I have days like that too, guys. It's just the only difference is that I stop on those days. And I'm pretty sure, if you look through all these live streams, you will see me, some days that, I try one trade, doesn't work out. Try another trade, doesn't work out. Time to call it a day. I actually like to stop after 2, never mind 3. However, if you're still in an experimentation phase and if you're still not consistently profitable, it's okay to give yourself more attempts because you don't want to just do, oh, God, I messed up the entry. Oh, shit. So then you try again and then you go, I messed up the entry there as well. Oh, no. But you know the trade. You know the setup. You know what should happen and it happens. It's just that your execution let you down. And this is also why I say the measure of your progress should never be just looking at your P&L. Because sometimes your hypos are spot on. Like I see this in my coaching all the time. Spot on hypos. Execution, not so much. So then you have to identify which part you need to work on. If it's getting in too early or getting in too late or maybe rushing ahead of the trading location or the level. I always like to wait for something to happen before I put on a trade, whether it's an actual pattern or a TPO profile event, or whether it's just looking at some orders on the ladder, which I wouldn't really recommend defaulting to if you don't have your good levels first. I feel that these days, many people default to like bookmap, footprint, and those micro order flows before they understand the full context of the market narrative. So once you sort that out, things start becoming a little bit easier. We have people in here who have been on the Market Stalkers program for a while now. Some of you have been here for 2, 3, 4 years. And they can tell you about the progression of their own skill level, where you start off screwing things up constantly, but then you develop your eyes to be a little bit more selective with the types of entries and trades that you're taking. And suddenly things start falling into place. Now, you're not going to be perfect. Nobody is. Perfection definitely doesn't exist. But, having those big orientation points, it really goes a long, long way to keep you out of trouble. A long, long way. Abdias says, yes, I'm done. The little D on my shoulder helped stop the goblin from taking over. I'm very happy about that. And I am little D. I'm very little. I'm only 5'1". It's why I wear very high heels. But that's another problem. I like how you put that. The little D on my shoulder told me to stop. Awesome. So let me be that voice in your head that tells you to stop. I really like that concept. Cijo, do I do free live all day? No, God knows. I've got a life to live, guys. No, I usually just do these live Thursdays for members. And what we do here, usually it's mainly for people who are already on the Market Stalkers Method program, either on the Bronze, Silver, or Silver Plus Pro Development Program membership. I give them an opportunity to come here and ask the questions relating to the program. So it's not really that entertaining. Usually it's not like, hey, let's do this. And I do some trading. Obviously I do trading, but the whole point of the YouTube membership is for the members who want to ask more questions directly in relation to whatever is happening on the chart now, so that they have a point of contact with me, right? So usually it's a pretty intimate setup. We usually get about 10, 15 people in here. Obviously, I'm still a very small channel, so I obviously don't expect to have like 300 people plowing in here. And it's a good thing because it is an intimate setting. Everybody gets to ask a question, and I want to keep it that way for now. By the way, guys, we are going to be doing an end of the year sale on the Pro Dev program. So all memberships apart from Gold, because Gold is effectively working one-on-one with me. We are going to be running a 40% off on Bronze, Silver, and Silver Plus membership. So that's going to be kicking off tonight at midnight EST. So Eastern, so midnight Eastern. If you are already on the newsletter, then you will be getting an email with the code. If you're not, then go to the main website and sign up. Watch the free intro. And then you're going to get a really nice discount that saves you money. And obviously we're not the cheapest, because that's not the point. I don't want to be, oh yeah, it's very cheap. Like, that's not my desire to be the most accessible program out there, because it's not for everyone. Again, it requires a lot of dedication. It's very systematic, so not everybody will gel with it, purely because of the amount of information that is in there. And it typically takes about 9 months to 2 years to actually get the grips with most parts of the method. I have 4 pillars of the method, as you guys know. We have supply and demand on larger time frames. And although they have a use intraday, they're not the be-all and end-all. Then we have the average ranges, used in a multitude of ways. Then we have time of day, day trading time zones, very important concept, especially for things like crude oil and gold, that are effectively Forex-linked instruments. They follow some of the behaviors in Forex because of the relationships that those currencies have in these products. And there is something that happens in the middle of the day that is very important to know. All right, so let's have a look at questions. Lenny Bradford, I like that name. When you decide to stop trading on the day, how do you feel about watching a trade that you wanted to play out as you expected? I don't care, because there's always another day, always another trade. I'm coming from 16 years experience. I started trading independently with my own money in 2008. I became a prop trader in 2013. And one thing that I've learned in all of this time is that there is always another trade, okay? So I couldn't give a shit that the market plays out as intended. If it didn't play out without my stop getting smacked a couple times, it means that it didn't play out exactly how I wanted it to, or that I malfunctioned on the day. So I effectively didn't execute correctly. I was rushing. There's always a reason, right? Very few times it will be, the market screwed me. Very few times. Like, out of that, I might have had, this year, I think I had twice the time where the market actually screwed me. And both times I had the stop loss on. So luckily nothing happened. But, I just got hit, and that was it. The end. Exciting story, bro. But yeah, so with the FOMO, you need to learn to make an executive decision that you're stopping for the day no matter what. That is a part of self-discipline that you need to work on. And the more you work on it, the easier it gets. Because your brain starts off with a new skill, because it is a skill like any other. Whenever you start a new skill, everything's bloody hard. Walking away and then trades working out is hard. But risk management has to take priority. Your budgeting on the day takes priority, not profits. So when you flip that in your head, no trade is worth risking more than you can afford. And when you get hit 3 times in a row, but your best trades are only 1 R, 1.5 R, it becomes extremely difficult to drag yourself out of that 3 R, minus 3 R on the day. So what I do, I'm very big on budgeting. Even if I'm scalping, like yesterday, you might have saw me scalp, I will still cut the amount of risk that I'm planning down to half. So even though I was risking 35 ticks, I never intended, if my trade didn't work out, my maximum loss on the scalps was 18 ticks. And, when gold got to 11 ticks, I was like, I'm bailing. Like, fuck this. I'm not going to stay here. By the way, guys, on Top Step, obviously, I don't swear. This is my channel. You will find that my mouth is quite a bit more profane here. So I do apologize if you expected, the composed D that does crack jokes. But, we are trying to keep it PG over there. We're trying to not piss off the YouTube algorithm. So we try not to swear. So with the FOMO thing, just remember that you need to match up the number of trades that you're willing to lose in a day with your average risk reward that you're able to get. Now, usually my average risk reward across all of the trades usually floats from 1.8 up to 2.2 profit factor, which means that on average, out of all the trades that I do, I usually get about 1.8 to 2.2 profit factor, right? Obviously, it's a different number because throughout the year, that will go up and down. So I can't really lose more than 2 on the day without then needing like 2 trades to get back to scratch the next day. I don't want that. Okay, so I'd rather just stop at 2R, minus 2R on the day, and then the next day I only take 1 trade to get back to scratch. Much easier to deal with psychologically than going just another trade and another trade. I'll try again and again and again. And that's where, again, looking at your performance metrics really has to start taking a bigger role, center role in your trading. Hello A, that's again a very nice username. Hello A. hello A. Another sub from Top Step. Thank you, welcome. Nice outfit, yes. A little bit unwieldy, but I'm dealing with it. Yeah, Brian C says, I know exactly what trade you're talking about. Yeah, GC, exactly. There was like, I was in a perfectly nice, what was it? I think it was a value high reversal or something. Like it looked so juicy, and it is a high probability trade. I think I was on Top Step actually. And then it just went smash. I was like, what the fuck was that? But getting upset over it, I just laughed. I was like, oh great, yes. This is very interesting. This is why hard stops are pretty good when you can have them. And to be honest, even when I'm trading with size, because obviously I have different size accounts and stuff, if I am going to trade 15, 18, 20 lots, I will have what you would refer to as iceberg orders for my stops. So sometimes crude oil gets pretty thin, and during the summer it was pretty thin. So I had to do like 5 lots on one price, 5 lots another price, 5 lots another price, and then as the market, if I was going to lose, as the market kind of went through those, it would take me out at different prices without me having to manually do it. So that's another way to control what's going on, and that's where the average price of a stop loss can be around 35 ticks, but again, it's not like sometimes it's 38, other times it might be 42 because I'm putting those iceberg orders and all that. So that's another issue for when you are trading with size, you're trading a thin market, and you suddenly start seeing problems with order executions. Obviously, on these kind of things, I like to keep the pressure low. So I do try and just do 1 and 2 contracts for now, and also the Top Step account is fairly new because I've joined their prop desk. So obviously you can't go in guns blazing. We talked about that I think last week or the week before. When you go into the live account with a certain amount of money that they give you after the XFA, you can't just go in smacking in 20 lots. Because especially if you've never traded in a live account, you never got funded and stayed funded, totally different ball game. So you have to start slow, and just remember, it's not forever. Trading one lot, trading micros, it's not forever. It's a means to an end, and you need to maintain the account. You need to first keep that account, and they've given you trust based on your performance in the XFAs that you're gonna do well in the live. So don't squander that opportunity. Just trade sensible. Trading with size is not everything, and we've talked about this in Top Step as well. Where if you're consistently making 350 a day, 400 a day, 200 a day, 350 a day, 200 a day, at the end of the month it all bloody adds up. Like imagine if somebody was offering you a job where they're paying you $350 per day. That's a good job, right? It's quite a bit of money. It's like people have entire families on 100 grand a year. Not in London, but let's say we don't live in one of the most expensive cities in the world. That's a lot of money, right? It can give you a really comfortable lifestyle. It's not all about making millions. Millions will come if that's what you're after. It will come. But it should be a side product of a good process, not size for the sake of size, and then you just like we go crazy and dopamine rush and all that, up down. The swings that large traders have, some of the ones that I've seen in the retail world, they're crazy swings, man. We're talking up 70K, down 35K. That's like 50% drawdown. That's not good. So let's try to keep those drawdowns to no more than 20%, even if you're trading with size. And then once your process catches up, sky's the limit. And you see, you have you have certain people who will only look at ticks, and I'm one of those, right? So whenever I'm evaluating a trader's performance, I don't give a shit what size you're trading. All I want to see is risk reward, how many ticks you're taking out of the market, and accuracy to a degree. But again, accuracy is not the be all and end all. I actually think it's the least important metric. Risk reward is where it's at. If you can consistently make 1.5, 1.6 profit factor, and you keep doing that, you can even have like 40% accuracy. You will still be wildly profitable. And that's when you size up, when your process is like absolutely on the money. Guys, I'm seeing some sell orders around this level. So if this doesn't go up soon, I'm going to bail. And then I'm actually going to call it a week. So need to preserve the profits. But let's see what they do around these orders, because they just got smacked. Okay, so some buyers came in pretty aggressively. That's another thing. When you see a lot liquidity on the ladder, if aggressive buyers come into it and go smacking through it, that means they are basically just assaulting those levels with quite some size. And again, that's the micro order flow that I don't really recommend looking at before you have your levels spot on. So yeah, I'm just going to keep this running because, like I said, seeing that, it means that there's still buyers in this market. Even though it's so bloody slow, it's obviously just a slow auction. And this can take hours, like hours. So right now I'm in this trade. So this was one of my most important hypos, sustained auction long. And why? Because we ignored the average daily range high, which was at 71.60. So during the initial balance, we went through that and then just didn't look back. And then I was talking and doing stuff, trying a failed auction, didn't work. And now I'm in this. So I'm just going to keep it going, at least until another half an hour, maybe even an hour. Because that's the time of day when crude oil likes to reverse. So if it's going to reverse, it's probably going to keep doing this bullshit for like another hour at least. Okay, so let me see. Alex. Heidi, new to Crude, what contract on Ninja are you on? Well, Ninja, I think, rolls everything automatically, so I'm on January contract. What you're seeing here, this is just AMP futures, MetaTrader 5 that I use for my charting. I have the Blahtech ecosystem. Blahtech are my indicators. Well, they used to be James's indicators, and then we joined forces quite a few years ago, and they actually own us. They own Market Stalkers. So yeah, the ecosystem is Blahtech on MetaTrader 5, but the contract on Ninja is January. However, because this is CQG data, it's CLEF24. But it's all the same thing. It's January futures. DV8 says, I've been learning to trade as a successful biz owner, so I'm great at risk management. Awesome. My account basically hovers at initial balance. Listen, being a scratch trader is a stepping stone, man. Just by the fact that your account balance is not dipped significantly below that, that's achievement. And if you're relatively new to trading, like if you've been trading 2 to 3 years or less, that's awesome, right? That's really good, because most noobs, they kind of go in guns blazing, and then in 10 days all of the account is gone. So that's actually really, really good. So you're good at risk management. Just make sure to match up the number of the number of trades that you do in a day with your maximum loss allowed. So maximum number of trades that you're allowed to lose, full 1 hour. That means if I'm using 35 tick stops, 70 ticks minus on the day is the most that I'm allowing myself to lose. Obviously, once you get to a point where you can read the market in a little bit more kind of situational fluency kind of way, you can chop and change, because not every trade will be minus 1R and not every winning trade will be 2R. So, you know, a lot of my trades will be 1R, 1.3R, 0.8, and then I have the big home runs, 2.3, 2R, sometimes even 3R, when the day for that kind of play is right. But yeah, it has to be matched so that you don't spend an age dragging yourself out of a drawdown. So that's why I like to stop it -2. So if I hit -2R, minus 70 ticks, however I get there on the day, I'm done. But by the same token, if my first trade goes to full target of 2R, I will usually call it a day. I will be like, I made money, I'm done. And that will become easier to do the more successful you start being, and the more your process evolves. My target crude oil, ideally it's 2R, which is 73. So we'll see whether we get there. If it doesn't get there in an hour, I will take it. I will also say that I do like to time stop my trades, so it's not all about the price-based target. I have a lot of my trades that are simply running out of time to do what I wanted them to do before I expect another playbook to show up. And on a day like today, when we don't have that much movement, you know, it's just crawling. It's going to be a time-based stop, so time-based target. And for me, for this particular product, for crude oil, I usually like to time stop it around 1:30 p.m. Eastern. Because by then, we start statistically seeing the market reversing, so I don't want to get caught in that. And actually, I call that setup the day range fill. It's all in the program. And it's one of the setups that has saved my skin like many a time. If I had a crappy day where I didn't read the market very well in the beginning of the day, especially when I was working for some of these firms that want you to do like 1 million trades per day, that would be my saving grace. So I would be trying, failing, and then day range fill comes, and I do my reversal trade. As long as it's not a huge trending day. If it's a huge trending day, then that setup doesn't work as well. And in that case, I will look for a pullback as an opportunity to get into more directional movement. But today, we don't have a big trending day. I mean, this whole move is 100 ticks. It's 100 ticks wide. It's like, bleh. London took it higher. So if I go kick off the Blahtech backtest mode, which I call the time machine, if we go back to London, also open outside of range, went back up, tested slightly back towards the initial balance high, and then we just kept going up, up, and up. And now NYMEX is doing the same thing, so I'm not going to fight that. Yes, we do have a mean reversion opportunity, but it hasn't come true. And this is where reading profile objectively, rather than through your own bias lens, that can help miles. If you haven't seen my long form YouTube video that I did last time, just go and watch that after this show, because it's something I talk about. So if you see a directional movement and there's not much evidence of anything else happening, just don't fight it. And even though trending days are not the norm, you can still squeeze out a few ticks on the same side. But yeah, today I'm going to time stop this at 1:30 p.m. wherever it is, if I'm still in the trade, okay? Brent says, Dee, how often do you use the ladder? I've been wondering how that would be helpful in the market stalkers method. I only use the ladder if I'm getting into a directional move and I want to see that there are no massive opposing orders on the ladder that are sticking out. So if you look at the dome and if you see like huge orders, they kind of look like supply and demand areas, but only on a very micro time frame. So if you go by that, you don't want to see a whole bunch of orders smacking against your trade, right? So you don't want to go into them. And if you do see them and you still want to execute, try to look for pullback from those levels and then maybe into the other side. Again, once you get to that point, that's a very fine way to look at things, and it would help if you're already in like 3-4 years of consistent profitability and you've been trading with the method with great success. You're using the TPO profile to its full potential. You know how to use the session ranges, averages and session ranges as a volatility indicator and also as a reversal level. So all of that is already in place, but now you're looking to improve your execution. So that's where that kind of additional micro order flow can help you. Before that point, I would not really mess around with it, because all it's going to do is it's going to make you close trades early, overtrade, and the amount of people who come to me from Footprint that have gotten themselves into a mess because they were staring at Footprint and Bookmap, and they can't stay in a trade for the life of them for longer than like 10 seconds, it's quite epic. And then we wean them off of that while they learn the context, while they learn the whole contextual narrative of the market. The improvement comes very quickly, right? Then you can go back to that, okay? But now you will have extra experience of what works and how you should be doing things, and then matching it with micro order flow. Another thing is that I like to default to a 15-minute chart for any price action, but not on ranging days, because that's a very big time frame for a ranging day. Again, ranging days are challenging because you do have to dick around with very, very small time frames because they require accuracy. But when it comes to looking at the profile, I exclusively use 30-minute TPOs. So I don't dick around with 15-minute TPOs, nothing like that. I use 30-minute TPOs, and then I might look at price action on a whole bunch of different time frames. I call it the ODA loops. So you would start on 30 minutes, something happens in 30 minutes. For example, right now we're trying to go into sustained auction. And in about 17 minutes, we are going to have the next TPO, which is the next 30-minute candle, hopefully closing above this initial balance, which is the sign that the sustained auction long is in process. If you're not in the trade already, that's where you can start looking either at the ladder, or you can even look at a 2-minute chart. 2-minute chart is actually one of my favorite time frames to get into some of the directional moves. And then if you want, you can even use some of Hoag's ideas of going into the directional moves using the volume and overall volume and volume profile, looking for those high volume nodes and low volume nodes. But I just prefer the regular 2-minute. You look for a pullback. Once it creates another move in the same direction, that will be a signal to go in. And then depending on the strength of the auction, that will either take your entry very quickly into profit, or it's going to be super slow, like today. So again, we need to match strategies to the type of the day that we're seeing. It's a very good question, Ocean. I will do that next. Any tips to improve risk reward? I have great success with 1-to-1, reducing full losses when needed, but when I try to do 2-to-1 or 3-to-1, not so great. Okay, I would say that 3-to-1 is probably very rare in intraday. 3-to-1, if you get 3-to-1, that's like a home run trade that won't happen very often, unless you have FOMC day and you were trading NASDAQ. But again, once in a blue moon, right? You're going to get those big moves. We advise 2-to-1 for a very good reason. And that needs to be placed in the context of how much range you're looking to have. So for example, if I see that right now crude oil has the average session range of 200 ticks, a little bit more than that, but let's say 200 ticks, and yet you're using 60 ticks to get into a trade. Getting a 2-to-1 in a single go, just like whoosh, it goes 120 ticks in one direction, that's going to be an unusual day. All futures are highly liquid products, and there's a lot of V-shaped type reversals intraday. So one of the problems that I see is trade location. And the second problem is chasing either ranging days on a directional move, pullbacks in a trending day, and just basically mismatching the strategy that you're using with the type of day we have. But it almost always boils down to the trade location not being right. But don't get me wrong, if it's a ranging day, 1-to-1, that's all I do. So ranging day, I never look for more than 1-to-1. Every once in a blue moon, it might smack through my 1R up to 1.5 R. Great. When I say R, I mean R multiples. Same thing as risk reward. So if I say, it's just easier to say. So instead of going 1-to-1 risk reward, I just say 1R, much shorter, right? 2R means 2-to-1 risk reward. 3R, and so on. So you get the gist. So basically, I will say that 3R is a little bit dreamland to get every day, multiple times per day. I will also say that 2R is pretty good, but it will only happen when you have the range and when your stop loss is small enough to keep you in a trade long enough, but also not so tiny to whip you out like immediately. So I would look at your trade locations, really, and the strategy that you're using, and maybe try and improve that. So, I mean, what do you trade? I can help you more now if you want, but I need to know what you trade and what your stop loss size is. Because even though I don't trade things like NASDAQ and, very often, I do know it well, and I do know how much it usually moves before it starts to do its NASDAQ nonsense. And that's usually about 24 handles. So you can expect a 24 handle move without a problem, without any major reversals. Anything after that is going to be a little bit tricky. But yeah, do share and we can discuss. Miss Healthy FX, hello. Hello. Good to see you. Ocean has a great question. Can you show on a chart a distinct auction fade and the difference between failed auction? Very good. Very good question. So let's go back and let me try and find a good example of both. A very textbook example of both so that we're absolutely clear on what we're looking for. All right, so here's an auction fade. So make sure you can see that. Yep, okay. So auction fade. Auction fade requires a sustained auction to be happening first, right? So it requires an extended move below or above the initial balance. Initial balance is the first hour of trading. So when you see the market moving all the way below, presumably hit some kind of a level, although not always, it can be a time of day thing. Time runs out and people start closing their positions for the day. That's why we have the fades into the end of the session. But for example, this is a very good day where the market went into a slower sustained auction, nicely fell, and then decided to turn around and fade the auction. And it faded, about 70% of that auction. Even more if you look at this. So it effectively retraced completely to the initial balance low before it yet again went down. So we're talking the auction fade of 94 ticks and then another pullback from the initial balance low to the tune of about 57 ticks. So again, both very good opportunities. If you know how to read that, that's one hell of a day. And it's very easy, right? So sustained auction first, some kind of an extended move that has a sufficiently decent move away from that first hour of trading range. And then it stops, turns around, and goes right back where it started. And actually, if you know Coach Ray is one of my market stalkers. He loves doing these auction fades up to VWAP. And you can see here, I bet he was all over this. So yeah, he basically grabbed 2R right from the reversal. And we do use lower time frames to get into these setups. We wouldn't necessarily be using a 30-minute chart. I like to use a 5-minute chart for these reversals. and then you get a big chunk of that move. So even if you grab like 60 ticks, 50 ticks out of it, that's one hell of a trade. That's like 1.5 hours, right? All you need. And then a failed auction. So let's go back and find one of those. I know that crude oil hasn't had a good one for a while, so we may have to look elsewhere. Oh, here we go. Okay, no, I was wrong. So clean up the chart. Okay, so this is now a failed auction to the downside, right? So this is the first hour of trading. We go up. The third candle, C period, starts to go up. So it pierces the top of the initial balance. But it doesn't close above the initial balance. It actually closes back inside it. Now, a lot of the times, this might not be enough of a signal, but in certain cases, it might be just about okay to get involved, at least as an assumption, right? Well, the auction's not doing very well. I should try a short. That's perfectly fine, okay? That's an assumption that has merit. It's not like, oh, I think it's going to go that way. No, it's something that we've observed, and when the auction is not particularly strong, you have a good chance of the auction failing. And this is what happens. So the very next candle tries again, but again fails, and then creates a what? Bearish engulfing. In my method, any bearish engulfing that is significant represents a good supply. So we can then trade from it if you get a chance. Now, this was a pretty decent sized day. And to be honest, I probably would have tried getting in somewhere here, so I would have taken some heat there. But if we assume that I might have entered right around here when I saw this failing, and then maybe I was like, oh, should I go in? Should I not go in? And then I decided to go in, 35 tick stop. And then what does the market do? It rotates to the other side of the initial balance. This is your classic failed auction setup. That's a very important setup. Crude oil, if you take a long sample size, you look at the last 3 years, it actually does this 70% of the time around C and D period. Obviously, when you see a directional move, that's another thing. Again, objectivity matters. But when it comes to the failed auctions, C period and D period, so that's like the second hour of trading, that's a high probability setup. If you were on Top Step TV when Dolby and I were talking about crude oil, he's also noticed that. So he will frequently play a fade, even without knowing what a failed auction is. He still noticed that something happens around that time. And, you know, this is too short to kind of go into the mechanics of why it happens, but there's a good reason why these events happen. And it's a high probability play. So if you learn how to read the failed auction, you have a very good chance of at least a partial failed auction, of at least the price going to the middle of the initial balance. And this time, it went all the way down and then some into a neutral day. So failed auction has the expectation of a target on the other side of initial balance, basically going right back where it started. Obviously, sometimes you can have partial failed auctions, but as long as you have space for at least 1.5 hours, so at least about 50, 55 ticks, it's game, right? So these two examples are pretty clean. You can have hybrid setups where things are not as clear-cut. Obviously, that's where experience has to come in, so I'm going to try and find one where it's a hybrid setup. Okay, so here we go. Here is one that has several things going for it. So there was a strong auction up, and it succeeded initially. But then they tried to go higher, then smacked it down, and closed it just underneath the initial balance. But then it chopped around and chopped around and chopped around, still went all the way down, but this was an uncomfortable day. This is horrible. So what was happening here? Why didn't we have a clean drop through the initial balance? Well, you had loads of buyers coming in that created demand. Here they are. See that? That is really sketchy, right? So it's like, is this a neutral day? Is it a sustained auction with single prints? Is it an auction for, like, what the hell is it? And to be honest, this is where trading gets difficult on days like these. Luckily, you won't get that much chop on most days. And there's another thing that I look for, time. So with failed auctions, you need to see that the auction failed and then went through most of the initial balance already in about 30 to 60-minute period. If that's not happening, if it's chopping around the edge and it's like going back out, coming back in, that's all building structure on the profile, and it's more conducive to the neutral day than it will be to any kind of an auction fade or a failed auction. So time, very, very big component in my setups, at least. Failed auctions are quick. They fail, they rotate through the initial balance, everything's over, right? But you have days where, you're like, is it a failed auction? Is it not a failed auction? What's going on? Here's another clear failed auction, London. The market tries to go lower. I'm going to highlight that here. So it tries to go lower, creates a bullish engulfing, and then already on the next TPO, next 30-minute candle, we go all the way back to where it came from. Ergo, failed auction, right? And that's a complete failed auction setup, all the way to the other side of value. But like I said, as long as you have 2R or 1.5 or, anything that's like over that statistical hurdle for profitability, I would take it. And here's an auction fade. So we have a very nice auction. It jumps down, settles in, reverses, and then fades the auction for 163 ticks. This would be another Ray type setup. So again, reaches VWAP, reverses, reaches VWAP, goes back down. Very, very frequently. And I didn't even go back that far, guys. This is like 30th of November, We're talking like 2 weeks. I've already found not just like a random setup, like at least 3 textbook setups. I didn't look carefully through the others because they look like neutral days. But, it's really quite frequent. Here is another one of those types. And this one is actually coming from an average daily range low into a failed auction, and then all the way rotating through and smashing to the other side as well. It happens really, really frequently. So knowing how to recognize these is going to save your ass from so much trouble. Failed auctions are awesome. I bloody love failed auctions. All right, let's have a look at questions. Okay, so GP Trades says, I usually trade ES with a 10-tick stop loss. Okay, I usually trade ES with a 35-tick stop loss, which is probably the reason why on some bigger days I'm able to stay in for the full 70 ticks. So you might want to consider, I would say that that's a very small stop loss. Anything that is like the 10th of the average session range, that's very small, and that's scalper territory. And in that case, unfortunately, you will be looking at accuracy over risk reward, because that size stop loss will not allow you to stay in a trade long enough. So that's one of your problems here. If you want to carry on being a scalper, that's great, but just know that scalpers run on accuracy rather than big risk reward. I'm not a scalper. I can scalp, but I don't want to, because I'm 43 and I've been doing this for 16 years. So, for me, there are easier ways to make money. But, if you're still new to the game, you're still very motivated, you're still, wow, I really want to crack this, scalping is absolutely great. But like I said, there comes a time where you just want something less stressful. I don't want to do, 15 trades in a day looking at micro order flow. That's like, ugh, makes me physically nauseous. Trader Dean GA. Hi D, if I'm using a different platform than a MetaTrader, I can't use your indicators. Would I miss a lot? Well, you wouldn't. I would say that my indicators are a stepping stone to automation, right? So it's not that, you absolutely have to have them. There are alternatives, but not quite to the level that we've got. So one thing that I was using before I had Blahtech indicators, especially for average ranges, I was using Excel spreadsheets. And then throughout the day, like for example, if we started average session range levels, so the market opens, you calculated your average ranges, here's the average session high, here's the average session low. And then as the market makes either a lower low or a higher high, you have to modify those on some days, especially if it's a directional day. This wasn't, so you wouldn't need to do that. But if it's a directional day, you have to keep sort of recalculating yourself. And I just found that it took me away from what I was supposed to be doing, finding setups. So I was so happy when we were able to actually get these indicators done. Now, what I say to everybody, because we have loads of people doing NinjaTrader, and we are working on NinjaTrader indicators, by the way, but they're not going to be around probably for another 6 to 9 months, because we've got other projects that take precedence. Because remember, the development team is not just me. I'm not there with, like, James Cater going, hey, dude, can you code this for me? Like, these are people who work for other institutions. A lot of them have projects. They're contractors at like different places. So we need to make sure that everybody, sits down for about 3 months and then translates all of these into C#. Now, the good thing is that Ninja is C#, but MQL is a derivative of C#. So it's like I'm nerding out on you guys now, sorry. But it's basically not going to take that much time to translate it's not going to be like a year or 2 years. So once we get going, it's going to be a fairly quick process. But at the same time, I know that these guys are booked until February, March next year. So my development team has left me. So yeah, we're probably going to be starting the whole process in February, March. But we've already had meetings. We already, scoped out the brunt of the work that needs to be done, and it's not going to be that difficult. Until then, what everybody else does is that you get a cheapo AMP Futures MetaTrader 5 live account, chuck in $100 in there, and you can get all of the indicators there, and then literally just use that platform as your charting software. So that's what I've done. That way you have consistency. You're not jumping to a new charting package with every single new platform that a prop firm decides to bring out. And it's a fast-paced industry. We are seeing the development of prop firms. We are seeing more popularity in prop firms, and that means there will be more platforms. So far we've had Intraday with Finamark platform. We've seen NinjaTrader. We've seen TraderRate stepping to the game. We've seen, it constantly changes, right? And for me, that's a bit annoying because every time I went to a new prop firm, suddenly I had to port all of my indicators. So I got sick and tired of that, and I just settled on one. So I'm MetaTrader 5, AMP Futures, small live account. That's what I say to all of my students. And then you just have the cost of the indicators. You can buy them for a lifetime. They're not that expensive at all. In fact, for the functionality, I think we're probably the most affordable package for a serious independent trader that you can find on the market. So, But if you don't mind dicking around with Excel and all that, knock yourself out, man. There are ways around it, right? I just don't feel like I want to go back and to say to people, hey, don't get the indicators because you can do this all by yourself. There's automation. It cuts down the whole process from 4 hours of clicking and drawing zones and stuff. We have the supply and demand indicator that is a multi-time frame indicator. So instead of you jumping through the time frames, you can just click on one button, and I can see there's a strong 4-hour demand zone right here. You can see these blue lines. That's the multi-time frame indicator. If I want to see the current time frame, there they are. If I want to see one time frame further up, probably going to have to scale out, because I'm not sure what we've got here. Yeah, not much by the looks of it. There is a third button that you click, and then it has there we go, they're all the way up there. So this is the third daily chart. So this is your daily chart supplies. That's where they are. And then we have 4-hour supply and demands. And we have current time frame. So all of that, you would need to go, okay, first time frame, draw zone, draw zone, draw zone. Go up to 4 hours, draw another zone, draw another zone, draw another zone. And then go to the daily chart, draw another zone. It's who's got time for that, man? So this is why we did this, because there was nothing really on the market that was doing what it was supposed to be doing. And I stepped in, spent a lot of cash commissioning these, only for Mr. Cater to go, hey, how about we join forces? It's like, why didn't you join forces when I hired you? Join forces after the fact. But hey, we like Mr. Cater. He's a great guy. All right, that's my CTO, by the way. Okay, so let me see if there are any more questions. What do I use for IB range? Oh, hold on. Oh, God, I've missed some questions. Ocean Blue says, D, why isn't a failed auction also an auction fade too? Because there was no successful auction to fade. The auction failed right off the bat. So it's a different implication. And then if you have an auction fade, your target is initial balance, nearest initial balance edge, not the opposite edge. So we're not expecting the market to go all the way through and then to keep going. So it's a difference in market mechanics. Like, what did the market participants do? And how did they all behave around that particular breaking point? So line in the sand, initial balance edge. Was the auction successful or not? And then you can also have the market that does a partial auction fade. It doesn't have to go all the way back to the initial balance edge, right? So it's difference in success of the auction, expectation of target, and then a complete failed auction where they never managed to get it up, pun intended, or down. And then you have this like really quick move through the initial balance for the failed auction. Whereas the auction fades are typically slower. They take a while. Like, they go up there, they usually like build some time. So they stay where, like, let's say you have an auction in NASDAQ and you want to fade it. Probably not very recommended on most days, but stick with me. Hypothetical scenario. And then you effectively want to see time before you're going to fade that auction. Whereas in the failed auction, you don't want time. You just want it to fail and be done with it, like, really quickly. So again, difference in what is the expected behavior and how quickly you can get your setup. Miss Healthy FX says, I've been learning this concept's basics from Coach Ray sessions in Top Step Discord. Love it. He's changed my life. Yeah, I mean, Ray came to me, I think it was about 2019 it was. So Ray has been with me for 4 years now. And he came to me as a directional trader who was always looking for momentum trades. And once I set that, he only took 6 months to get the grips and to actually get funded by Top Step. I was really impressed with him. He was very calm. He was possibly the calmest newer trader that I'd come across. And he never had a problem just doing 1 or 2 trades per day. They were always super high quality trades. And once we just set his skills to look at those orientation points and to look at the auction process objectively, he started smashing it. And he didn't even tell me that he was doing the combine. And then one day, I think it was like probably at like 5th month mark, he goes, yeah, so just wanted to tell you I'm funded. I was like, ah. So yeah, I'm very, very glad to see that Top Step recognized him. And then over the years when I was talking to Hogue, because I kept in touch with Hogue like all throughout the years, regardless of whether I was trading for them or not, I was just like always buddies with Hogue. And he goes, D, I wanted to ask you, Ray Trundy, he's one of yours, isn't he? And I'm like, yeah. I was like, how do you know Ray? So Ray was going to the Market Profile Lab by Hogue, and then he was combining all the stuff that Hogue teaches with my methodology as well, because there's a bit of crossover when it comes to the market profile stuff. But then I obviously have all of the other things like supply and demand and average ranges, time of day, blah, blah, blah. And it worked so well for him. It was like such a sort of like a dream bumping of skills. And then Ray just turned around and he was like, hey. So for a while, I actually had Ray helping me with coaching for the Go members. And then he said to me, hey, yeah, so anyway, Top Step, I'm a performance coach. And he's actually a teacher as well. So it's really, he's one of a kind, because you don't get a lot of people who are actual teachers. He's a science teacher. And he's a former IT guy. So he knows everything. It's amazing. So now he's a Top Step coach. So I'm totally blown away by Ray. Love Ray. Okay, so what's a stop on NQ? Or what's my stop on NQ? I usually like to use about 20 to 24 points handles on NQ. And with NQ, I never really get more than, I mean, I don't really look for it because I hate how it moves. So I usually bail at about 30 ticks, 30 handles. And that's all of my profits. So about 1.2, 1.3 R, that would be like my trade. Very frequently, very infrequently, I might see an average session low reversal. And then I'm a little bit more confident to keep that going for 2R. So for the full sort of 50 handles. But other than that, yeah, I don't like using anything less than 20 handles. And for me, 24 handles seems to be a pretty good, what's the time? Okay. Pretty good middle ground for staying in a trade long enough. Obviously, you have to have a good trading location for such stops. Otherwise, it's going to whip you out because it's like such a crazy instrument. Is my background in computer science? No, my background is in music. I have a master's in flute, but since I was 13, I was doing alto sax, and then I started playing guitar after that as well. So, yeah, music, basically. Asante wants to know, what do you use for initial balance range? Mine is at 3 on Thinkorswim, but it's quite late, also includes overnight session. Yeah, so most of the profiles will be a bit weird. I use Blahtech market profile, so it is all of this panel. This is supply and demand, but this is the Blahtech MP. So you can find that on their website. I can pop it into the chat. Oh, my sister has joined the chat. Hi, Sandy. Yeah, I bet you would like Ahsoka Tano, eh? Both me and my sister, we're like huge fans of Star Wars. And Star Trek, by the way. Okay, so you go on Blahtech and you click on products. There will be a link for both supply and demand and market profile and a couple of others as well. Just one slight notice, it is a new-ish website. We had a little bit of a mess up by our former internet provider who randomly decided to migrate both of our websites to WordPress, and I just blew my top. I was just like, you bastards. So then I had to recreate the whole website. So there will be links for supply and demand and market profile, but then there's the two others, VWAP and Blahtech DR, that only have the meta quotes app store links. So I'm still working on that. Miss Healthy Effects, how do you like AMP futures? Okay, so I love AMP futures. I actually have we actually have a relationship with Dan Culp. Dan Culp is the CEO of AMP futures. And in fact, the reason why Blahtech market profile looks the way it looks is partly because of Dan. He looked at what was on the market, and then he saw us, and he said, hey guys, can you come and become, one of our go-to indicators for market profile on MetaTrader 5. So we did some custom development for him. It was many years ago. This was like 2016, 2017. So AMP futures is fine. They take a little bit of a lengthy process to actually open an account, but I guess that's the case with any brokerage, right? So there is a compliance process that they have to follow, and theirs typically tends to be about 3 to 7 working days. So that's the only thing I will say that I'm not that happy about. And then if you send a support question, they also take a little bit longer to respond. Let's see. Martin Vuković, zašto je noću hladnije nego napolju? Zato što nemaš sunce, valjda. I ne znam, nisam, to mi nije specijalnost. By the way, we have a Serbian person here. This is what I just said. So he's asking questions, probably to check whether I speak Serbian. So I'm going to say to him, da, ja sam stvarno iz Beograda, ja sam Srpkinja. Ako si uopšte mislio da je to neka izmišljotina ili nešto. Rođena u Beogradu, živjela u Zemunu većinu mog života. Tako da, eto. All right, back to English. So hopefully you're happy with that response. Missed the start of the show, so don't know what's up with the outfit, but I love it. Also, you bring the most to the top set. Oh, very kind. Thank you, Guy. I think we all bring quite good entertainment, and I think we all bring a lot of value. Do remember that it is tradertainment over there, so, we do have our parts to play and stuff, so everybody's very funny. Obviously Eddie, Michael, Hogue, Andre, we're all jokers, right? So, and show people. So we all like the stories and cracking jokes, talking shop, all of that. And we have to make TV. So, so the outfit is because every year I usually do the last stream of the year. And last year I dressed up as a unicorn and people loved it. So I decided to do something crazy again. And this year I chose to be Ahsoka Tano from Star Wars. I figured, why not? Mark the occasion, mark the last stream of the year with a silly outfit. So yeah, this headgear is a little bit annoying actually, but I'll stick with it for a bit longer. So you're also a quant guy. Yeah, I wouldn't say I'm a quant. I would, if I had to classify myself, I would probably be more of a quant strategist. Because my coding skills are okay for like utility stuff, but I wouldn't call myself a quant in a million years. I would just say that I do use programming for some statistical stuff, and I'm pretty good at utility. But I'm terrible every time I need to put some graphics down. Just don't ask me to plot anything. Calculations, yeah, not a problem. Pretty things and bars and pixels, just somebody else do that, please. The Oscar Machado, I don't know whether I'm pronouncing that in any way correctly. Do you use a trading stop or do you keep your stop loss? I don't use a trading stop. I'm of the belief that if a trade is doing what it's supposed to do, I'm either going to take all of it, so 2R, or if it's not doing that well, I'm just going to take it wherever it is. I'm not going to wait for the market to go back to a level before I'm like, oh God, this is not good. So usually what you will see me do is I very rarely take the full stop loss. Most of the stop losses that I will take, they are 11 to 18 ticks, maybe 22 ticks if I didn't manage to react on time, maybe if I was talking, or maybe if if something happened, unexpected news. So it's obviously good to have a stop loss, but you will very rarely see me take a full 1R, because that's not the name of the game. I have an idea of what should happen. If the market doesn't look right for that trade anymore, I will take it off. Trailing stops is a double-edged sword. If you're just trading stops for the sake of it, I don't think you should be doing that. There is an argument for trailing directional trade stops. But again, directional trades are not the norm. So you're not going to get directional moves every single day. You're going to get ranging days, one trending day. Range day, single-sided auction that fails, neutral auction, ranging day, trending day. So it's like trending days are comparatively rare. And that's why I see a lot of people come to me and they go, oh, every time I try and trail a stop, the market comes back to my entry and then it knocks me out and then it proceeds to do whatever I thought it was going to do. What do I do? And I'm like, well, stop trading stops. For example, today's trade in crude oil. Long, sustained auction. I said it's going to be slow, right? And look at here. We're nearly, like, however long this bloody stream is going, 2 hours into the stream. It's still hanging around my entry. So I know that it's going to be slow because I can read the auction, right? But for me to go, oh, yeah, well, it popped up here, so I'm just going to start trailing it by 10 ticks. I wouldn't be in this trade. but I'm going to time stop it wherever it is. So I'm not going to wait for it to go all the way to my stop, and I'm probably not going to wait for it to go 2 hours at this time of day, because we're running out of time for such move to happen, okay? So trailing stops, I'm always saying don't trail the stops. And usually people who are asking the question, they have a problem staying in trades because it knocks them out, does what it's supposed to do, and then they're sitting there crying because they were right, but they didn't make any money, which is quite possibly the worst thing a trader can do, right? It's like you did a trade, you were right, but you didn't make money. Damn. And I had someone, one of my traders actually, say to me, I feel worse if I'm right on the trade and I'm not in it for whatever reason than losing a trade. Like she said, I would rather lose a trade than not be in the one that I originally planned out and the market actually did it. So, think what's more important for you. So do you want to make money when you are right? And also go back to see how many times that happens to you. How many times are you right on direction, but because of trading stops, you're never really in long enough? Especially if you're trading something like NQ. NQ moves up and down, to quote another trader of mine, an Australian dude, who's hilarious, up and down like the horse drawers. Yeah? And any trailing of stops in NQ, it's going to whip you out way before you give it a chance to do anything. So I'm personally against trading stops. Yeah, so I never trail my stops. If the market is doing what it's supposed to do, I let it. If I feel that the market is not doing anything, I will just take the whole lot off. There's no trailing. Again, personal preference, but in some of my statistical tests, I ran an algorithm without the trading stops and with the trading stops, and it decimated the performance. So one thing I can tell you for sure is that it's a bit of false economy. It's not protecting your it might be protecting losses, too many losses, but I can tell you with 100% that it cuts off most profit potential when you trail stops. So think about that. And if you're not losing a lot, and if you're not putting on like 70% of your account size on single trade, you really shouldn't have a problem losing a trade here and there. And if you have a problem, you're probably trading too large. We go back to that same, like I did like a jokey ASMR video a while back, where I was like whispering into a microphone while people fail prop challenges. And all three options were, you're trading too large. And then at the end of it, I just said, stop it. You can go back through my shorts and look at that. I think quite a few of you laughed at that one. It was an inspired short. The attempt in ASMR. Oh, Macedonian. Miss Healthy FX is Macedonian. Hey, former Yugoslavia. I was born in Yugoslavia, man. So as far as I'm concerned, we're all Yugoslavian. Positive. Yeah. My dad could speak Macedonian. I had a Macedonian friend. Actually, Sandy might remember him. Seseć Makedonca. There's a guy from Macedonia in my college, and he was a pretty cute guy. So we all had a bit of a thing for him. Yes, yeah, my sister's saying, oh, you're not playing Grogu. Yeah, you didn't dress up as Grogu. I couldn't find any good outfits. They just looked like, it looked like you're having a bad hair day with the hats. I figured Ahsoka is more appropriate. Abdias Sanchez says, got a good friend from Montenegro. She tried teaching me Serbian. It did not go well. It is a tough language, you know. I don't envy anybody who's not from the area and doesn't speak a similar Slavonic language of some sort, trying to learn Serbian. Headbanger Finance. Compared to the rest of the Top Step crew, I consider you quant. Thank you. But do remember that these guys are floor traders. Andre was a spread trader, and Michael and Hogue and Eddie were floor traders. That was a very different style of trading. So they have a lot of experience just reading the market in a different way. Hogue obviously is a bit of a hybrid because he's very good at profile. but he also relies a lot on like what the sentiment of the trade is. So he still has a lot of discretionary moments in his trading, but he's so good at what he does. I've been watching Hogue trade since I started learning with him, which was, I think it was like 2015. I don't know. It was a long time ago, and I watched him trade during the Market Profile Lab, and I was always like really impressed how he can find all of these like opportunities for a very small stop loss. Like I remember he was using like 6 ticks on ES back then. And granted, ES didn't move that much back in the day, but still, the accuracy by which he was able to get the trade location just totally impressed me. And then when I got funded by TopStep, we started talking, and it developed into a friendship. And now it's just like, he's definitely one of my favorite people. Like, he's such a cool guy. I love Hogue. He's so funny. He's very knowledgeable, very down to earth. Loves dogs. Loves music, loves dogs. He's a very, very cool guy. Hogue's my man. Yeah. All right, guys. So in about 4 minutes' time, I'm going to time stop this crude oil trade, no matter what it does. And, I really couldn't care less at this point, because I've given it, I've given it a long time now. I've given it a couple of hours to work, and it's still around about the same level. So that's going to be just a tiny little trade. Might find another opportunity later on, maybe in ES or in gold or somewhere. Gold to me is looking like it wants to do that neutral day, so I'm still going to wait until it gets a little bit closer to the session low, and then maybe do a long. With one caveat, so I don't want to see any single prints to the downside if we do smack through the initial bounce low. And if there's no such thing, then a ranging trade might be on the cards. I know that settlement is going through, but what I've noticed when I said on TopStep the other day that I've noticed some pre-COVID behaviors happening. Well, gold used to be one of those. So gold used to move pretty slowly, but it still used to move quite a lot even after settlement. It's why I keep my regular trading hours to go all the way to the end of the electronic session rather than just kind of cutting it off at 1:30. So because of that, I'm continuing to trade gold even post-settlement. So I have been able to try to find a couple of trades in the last sort of 10 days that still just continue to move. So that is going to be my plan. Ideally, I want to get along somewhere around the settlement. Obviously not without a reversal, but that will be the plan. And then ES, let's just have another look there. Yeah, so ES is coming into an area of average session low and the value high. So after 2:30 p.m., I might want to get involved into a reversal. So my day is not done yet, because again, I only did a couple of trades and neither of those did what I wanted them to do. But at the same time, I didn't lose much money either. So I still have my, I think I'm 1.8 R I have on the day to play with. And don't forget, I'm already heavily in the money because of my DAX trade from this morning. So that one did 83 ticks. So I have some budget to spend. And if it doesn't turn around, that'll be it. So I'm going to call it a day. All right, guys. So this was it for the last stream of the year, which was the reason why I'm wearing this lovely costume. I'm going to be back on second week of January. Let's see. Second week of January, which is 11th of January for the live Thursdays. But don't forget, we are running the end of the year sale on the Market Stalkers method. I'm going to do an email to everybody. So if you're not on the mailing list, go and join so that you can get the code in case you want to start learning the method. I'm going to give you directly the e-learning platform website. So go there, join it. You can watch a free intro to find out even more what it's actually about. find out a few things about me and market profile, obviously, because I have a little intro about market profile, and then I have the intro for the method and what it's all about. But don't forget, don't sign up to that, because you're going to get a better discount with the one that we're running now. It's 40% off bronze, silver, and silver plus. So keep an eye out for that past midnight Eastern today. So I'm going to wish you happy Christmas, happy Hanukkah, happy holidays, happy New Year, and hope you enjoyed that session. You would probably see me on Top Step next week. I don't exactly know what the schedule is back then. But yeah, until then, if I don't see you again, enjoy the holiday season, and I will see you back on the 11th of January. Until then, remember to try and be less grasshopper and more market stalker with every passing day. Goodbye.